If you apply for emergency cash and receive a rejection notice, it can feel like a sudden setback, especially when you were expecting a simple process. Many people turn to platforms like Possible Finance specifically because they do not perform a traditional FICO credit score check. When a platform advertises no credit check, getting denied creates confusion and anxiety. You might wonder what went wrong if your credit score was not the deciding factor. Understanding how modern financial technology algorithms evaluate risk reveals the specific reasons behind an application denial, allowing you to fix those triggers and reapply successfully. Financial platforms that skip traditional credit checks rely heavily on direct checking account data. When you link your primary bank account, an automated algorithm scans months of transactional history to calculate a cash flow risk score. One primary reason for denial is an insufficient or inconsistent direct deposit history. Platforms usually require a minimum monthly income threshold, often around $750, along with consistent payroll deposits over at least 3 consecutive months. If you recently changed jobs, switched bank accounts, or receive income through physical checks, cash, or irregular gig platform transfers, the system may flag your profile as unstable or fail to verify your earnings automatically. Another frequent reason for rejection is an active negative bank balance or a history of frequent overdrafts and non-sufficient funds fees. Underwriting algorithms review your average daily balance to ensure you can absorb a multi-week installment payment. If your account frequently hovers near zero or experiences frequent overdraft charges, the system determines that adding another loan payment poses a high risk of default. Similarly, having multiple active payday loans, cash advances, or automatic withdrawals from other lending apps raises an immediate red flag. Lenders see competing debt obligations as a sign of financial distress, which often triggers an automatic denial to prevent overleveraging. Technical barriers and identity verification errors also account for a large percentage of immediate rejections. If the personal details on your application do not match your linked bank account, or if the system cannot securely maintain a connection to your bank via third-party providers like Plaid, the application will be declined automatically. Furthermore, state regulatory restrictions or active military status under the Military Lending Act can legally prevent access, depending on regional lending caps. The key takeaway is that a denial is rarely permanent. Most platforms allow you to reapply after 72 hours once your banking metrics improve. To maximize your chances, link the specific checking account where your primary payroll is deposited. Ensure your account balance remains positive for several consecutive days, pay down existing short-term advances, and confirm that all personal verification details match your official documents exactly.